Hello, it's Robert Miner with Dynamic Traders Group with today's Daily 5-Minute Update and Trade Strategy. Before I begin, to show you a couple markets that are in very, very unique and important positions, is I'm making the offer of a $29 trial to our DT reports for just the next 3 days. I'm opening it up again. It won't be available after this Monday. There's a reason I'm doing it now, which you're going to find out in this special the special position a couple of markets in. So if you like what you hear and if you want to receive every report, update, video update, special report, and trade tutorial for the next month for what I think is going to be the most critical 3 to 4 weeks of the year, maybe of the past several years, check it out for just $29. And why? I'm going to give you the bottom line and the answer to that now before I show you. The stock indexes should make their high of the year no later than next week. They're in the most unique position I've seen in over 35 years of trading, analysis, forecasting, and educating. And I'm going to tell you a little bit about it in the next few minutes. And of course, I have a 20-minute video and a 10-page report for subscribers that'll give you every detail of why I think that this is going to be the case. And if you subscribe for $29, that one report is going to be worth it, but you're going to get everything that we do over the next month. Also, bonds and notes should complete a low by next week that will not be exceeded for the rest of the year, and should be followed by a trend to test or exceed the September high. That's significant. So both these markets, it's not just that they're probably making some really significant trend reversals and highs and lows, but fantastic trade opportunities to be aware of and to take advantage of. So we don't make any money forecasting, but we make money trading, and I'm going to give you the overview in this report. And of course, I got all of the details, including what will confirm this outlook, and more importantly, what will void this outlook in our full report. So let's get started. I hope you get excited and you get prepared to take advantage of this information. In this video, I'm going to do in about 3 minutes what I did in detail in about a 22-minute video for our subscribers, which included a 10-page written report with all the charts and summary of the technical position and the key levels to confirm what I'm going to talk to you about, as well as invalidate what I'm going to talk to you about. This is a monthly SPX chart up from the March 2009 low. I won't go into detail here, of course, but the bottom line is, for the first time in several months, the S&P is in a position to have completed the bull trend from March and 2009 low as of this last week. The last week, we reached what would be the typical target for an end of wave 5, and of course this is the end of wave 5 of 5. Very significant. But what's more significant, let me go to the weekly data, is up from the December 2018 low. That's the wave 4 of 5 in Elliott Wave terms. This is the most significant and critical piece of information, I believe, right now. This is what's called an ending diagonal. It's usually a pattern that's only seen as the final section in a higher time frame trend. In this case, it would be the final wave 5 in Elliott Wave terms in the trend up from the March 2009 low. And this is ominous, potentially very ominous, because the aftermath, when this section is complete, is usually a very sharp and fairly brutal trend against an ending diagonal. So this is very significant that we're at the price, we're at the pattern to complete it. Now let's take a look at a couple more charts. Here is another weekly chart. It's very simple. I'm just showing you how the time relationship right now to the 2019 September high and into this past week's high, the week ending November 8th, is a very similar time signature to the September-November 2018. Now, I realize the November high was below the September high, but it's the time count that is almost identical. And at the same time, for the first time in several weeks, at this new high, the DT oscillator weekly momentum has reached overbought. When it reaches overbought, we're very near a weekly high. And because this is probably the end of an ending diagonal, it's not just going to be a weekly high, it's going to be a multi-month high. Let's go to the daily chart. I got so many charts here, it's crazy. Here's our daily chart, and here's what you listen up, because this is really important. This is the wave 4 of 5 of that higher time frame ending diagonal. What's it doing? Potential that the wave 5 of 5 is also an ending diagonal. 1, 2, 3, 4, 5. I'm not going to go into detail what an ending diagonal is. If you're familiar with Elliott Wave, you know that it's the final section in a higher time frame trend. So not only is the higher time frame wave 5 a probable ending diagonal, the wave 5 of 5 is a probable ending diagonal. That's ending diagonals when they overlap. So get ready. Close before 37, below 3074.60 is the initial signal. A minimum of a weekly top is complete, and a close below 3009.60 indicates the bull trend from the March 2009 low should be complete. A close above 3131.50 voids this outlook. So we've got the specific market activity that will confirm we're making not just a multi-week but a multi-month top and a very significant corrective decline over the next months. And we have this specific price, what will void this whole outlook. Make a close above 31.50, not far above the market at all, is it? Make a close above that and delete this report in this video. Let's take a quick look at bonds, because that's the other market in a significant position. Notes and bonds, as always, are in a similar position, so I'm just going to look at notes right now. And remember, this $29 trial offer, not only is it going to get you the complete report of what I'm talking about now, which is much, much more extensive, but for the next month, you're going to get every update and you're going to get every trade signal as they're made. Okay, here's bonds weekly. As of the end of this past week, we came right down to the 100% alternate price projection of wave A. It was the 100% low to low count, and our weekly DT oscillator has been oversold for 3 weeks. This is in a fantastic position to complete a weekly low, and because it's a potential ABC correction, what follows a correction? Well, resumption of the trend to a new extreme. Fantastic opportunity here in the next few days. Bonds should be lower next week, but just maybe for a day or two. All the time factors are pointing to around the 11th to the 13th to complete the low. Now that's next Monday through Wednesday to complete an ABC correction. This is the 100% alternate price projection of wave A. It's the ideal target for an end of wave 5 for this count coming down. Daily momentums reached oversold on Friday, while the weekly momentums have been oversold, dual look back oversold for 3 weeks. Time factors early next week. Price, everything's there. And what's significant, not just a low, that's a tradable low that's going to last a few days trend, or even just 3 or 4 week trend. More than likely, this is an ABC correction, which will be eventually followed by a new high. Whether that's the case or not, fantastic trade opportunity we're going to have early next week for bonds and notes on the long side. S&P, other stock indexes on the short side. And by the way, euro and gold, major setups coming up in the next few days. So get ready. I hope you join us. with our DT reports. Join our DT community. You get a lot of information very inexpensively. And again, it's only through the end of the day this Monday, which is November 11th, that the $29 1 month trial is available. I hope you join us. Take care.